Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is March 15, 2018, the first day of March Madness, and I thought I would take a look at corn tonight, the ETF being CORN. We've got the trend is definitely to the upside, but there's some negativity that's cropping up here, and that's really what I'm going to be focusing on. So the trends are certainly to the upside. The seasonals and the technicals are pointing to the downside, so there is some weakness that's actually popping up here. One thing in particular is we have a wave high, that indicator. The wave indicator is pointing to the fact that the market is a little bit toppy and looking for a bit of a reversal. If we take a look at the patterns, this is the crux of the presentation tonight, is we had a stretch high and a pulse high that both occurred here in corn, and these are important for the short term. Short term meaning the next 3, 4, 5 trading days. If we take a look at corn in itself, here is the wrong market. That's cotton. We want to look at corn. And what you're going to see is an indicator, the stretch high, that has recently triggered in corn, and corn is a little bit toppy and likely to come back down to at least a more appropriate level. So here is the stretch high indicator. It's the red dot. You can see that over the course of the last few trading days that there have been some warning signs, some profit taking on the way up. We had in this particular case a day's high that occurred the other day, and they were precursors to the market sort of topping out. Now that we've gotten this stretch high, that generally means that the market has truly gotten ahead of itself and is likely to go into a little bit of reversal mode. The volatility, looking at our energy level, is high and starting to base out. And this was the breakout here to the 200-day moving average, and I know it doesn't have far to go because the 200-day moving average is at, I'll just call it 382, so it's not even that far away for the downside, but that's likely where we're going to go, at least on the short term. Here's that wave high that triggered, and that was showing that the market had certainly gotten ahead of itself and was likely to reverse. That's what it actually is always talking about. So anytime you get a wave high, it's worth looking at the market because there's probably some good opportunity. If we flip back to the website, just recently we went flat the market. We hedged the positions. We've got 2 long systems and 2 short systems. We've got a nice healthy profit going here in cotton, but it is certainly hedged. Soybeans were short with a nice little profit with just 1 system, and then on just regular wheat, not Kansas City, but CBOT wheat, we have a nice profit going on here as well. So that has 2 systems. So in the grains as a whole, we're actually doing pretty well with those particular positions, and in corn in particular it's hedged, so long 2 and short 2. If we take a look at grains as a whole, you see that the seasonal tendencies for all of the markets, with the exception of bean oil, but corn certainly one of the top ones, that it's in a seasonally accurate time period. So this is what I want to show you here, is that this on the 5-year seasonal chart, that being the blue line here, that the thrust and the easy money, if you can ever use that term, has been made from January into coming into March here. Now what we're looking at is a bit of a consolidation, and then towards the tail end of the month, going into early April, there typically is a little bit of a sell-off. So for the most part, if we flip back here to the actual market itself, these daily bars here for corn, I would suspect that we're going to probably come back and test the 200-day moving average, and we'll see how things kind of play out from there. If it actually starts to break it, then obviously we'll probably go down and test some of these previous resistance, which would now be support levels. If we look across here, this particular, it's not the strongest resistance slash support level, in this case support because it's above it. If you go across, you can see that it's going to probably, for the most part, intersect here with the 200-day moving average. average, which is still headed to the downside. The next lower level, if it's able to come down to this level, is going to be probably touching and beginning to penetrate the 200-day moving average. So the levels that you want to look at, since you're not going to have this on your screen, just simply watch the 200-day moving average, and let's see as whether or not the market is able to come down. Let's see how it actually tests itself out. And in that testing, our systems will most likely make a decision. Are we going to stick with the longs, or are we going to stick with the shorts? And so since we're in that hedged mode, that's part of the reason I wanted to point this market out, because there is some seasonal weakness. We've got overbought territory. We've got retracement down to logical spots, which is further down than where it is right now. So for those of you that are trading corn, heed the warning. Play this one on the safe side, and we'll see how things kind of play out here in the coming 3, 4, 5 trading days. And a lot of this will be predicated on what the systems actually do in either unwinding the long side of the hedge or the short side. I would suspect, depending upon how quickly we come down to this 200-day moving average and how we interact with it, that will end up liquidating the long side and then just simply maintaining the shorts. So we'll see how things kind of play out from there, and we'll take a look at another market tomorrow. Thanks for watching.